Well, CMHC's residential mortgage industry report came out and indicated that we're under more significant vulnerability to a problem with housing. Daily Bread Food Bank come out with some reports about what's going on in the city of Toronto, not really good, and we have the fall economic plan coming up at the end of this month. We're going to cover all this and your questions on episode 156 of the Wise Old Owl Show. I'm Vince Gaetano, thanks for tuning in. 156 episodes, that makes it almost 3 years. I know we've had a couple extra episodes in there throughout the time, but it looks like it's been 3 years I've been doing this on a weekly basis, and time has just flown by. So thank you to all of you for tuning in on a regular basis and throwing me as many questions and comments and feedback over the last 3 years to make this show continuously better. And we're going to dig down into data points and all that fun stuff to help out in any way we can make your life easier in the home buying and financing game. But first, let's talk about the CMHC residential mortgage industry report that just came out. So first things first, let's take a snapshot of what we're dealing with. The Canadian residential mortgage market is about $2.14 trillion in volume. That's the size of it. Okay, and in this year alone, up to the end of August, so that's 8 months ending, we've seen $244.5 billion processed in fixed mortgages and about $20.1 billion in variable mortgages. That's a 92.4, 7.6% split between fixed and variable. Definitely all fixed has been the focus over the last year and a bit, and we're starting to see a bit of traction on the variable side. But what's interesting about the report, it indicated that 73% of the portfolio is uninsured, and that's really interesting because in 2016 only 45% of the portfolio was uninsured. What that means is, if it's insured, that means the government is backing the default possibility of that portfolio. So that's what CMHC Insurance does, that's what Sagen, Canada Guarantee, any folks that have purchased a property with less than 20% down, or the bank has bought bulk insurance, which has become a little bit more difficult for them of late. That means that portfolio is guaranteed. And what's happened is over the last 7 years, the government has actually been shedding a lot of that insured product because they used to be at a higher level of insured. It used to be over 50% at 55%. Now it's only about 27%, which tells you that the government's de-risked its portfolio. And banks have been stuck with more uninsured portfolio, which could be the reason why OSFI's tightening the rules on lending, credit, and whatnot. So that was an interesting data point that I found in the report. But some other things that were pointed out, 290,000 mortgages came up for renewal this year at chartered banks. And over the next 2 years, in 2024 and 2025, there's going to be 2.2 million mortgages coming up for renewal. These are all folks that are going to experience payment shock. And when you extrapolate that over a 24-month period, that's almost 100,000 mortgages on a straight line basis that will be coming up for renewal and seeing a major payment shock with the higher interest rates. You have to remember that most will see more than a double in interest rates, and that's going to cause a lot of problems. Now, one of the things that the report did point out is that there's going to be some significant vulnerability to the housing market as folks struggle to make payments with these new increased payments. There is a significant percentage of mortgages, almost a third, that are in variable rate mortgages, and as we all know and talked about over the last year and a bit, the majority of those variable mortgages have fixed payments, which means that their amortization has been extended. It's in most cases going in negative amortization, and we're seeing folks having to come back in line with the original amortization, which is going to spike their payment even more if they don't come up with a lump sum payment to bring everything back in line. So the report is very clear in that it's starting to show significant concern about the housing market, and they are seeing car loan delinquencies go up, credit card delinquencies go up. There's been 6 quarters in a row where the delinquency rate has increased in these sectors considerably. And it also pointed out that they've seen a little uptick in delinquencies on the mortgage side of mortgages over $800,000. So the bigger size mortgages are seeing already an early indication that there's trouble brewing, and we're probably going to start seeing things break, as we're seeing in most cases that this is becoming a challenge for many. But on this front, I want to discuss what came out today with the Toronto's Daily Food Bank report. Okay, and this is startling because it's tough to talk about, but it is connected to rising costs of housing, rising costs of living, and the report today indicated that 277,000 people visited the food bank in Toronto, okay, this year. And 1 in 10 Torontonians have visited a Toronto Daily Food Bank and North York Harvest Food Bank. 51% increase year over year. 2.53 million visits to the food bank this year, and they do believe they will exceed 3 million visits to the food bank by people in the Toronto area. 1 in 4 people who use the food bank say that most of their income is used for housing. Almost 100% of their income has gone towards shelter and heating, and that leaves no money for clothing, food, and transportation. So this is what we're seeing. We're seeing the erosion of families. We're seeing the erosion of people's lifestyle. The cost of living has hit a level that we've never seen before, and the stats are quite concerning. And one of the biggest stats that was pointed out was 6.9 million Canadians struggle with hunger or food insecurity. Okay, 6.9 million. We got 40 million people in this country, and almost 7 million struggle with hunger. That's a problem. That is something that has gotten worse and worse and worse, and it leads me into the upcoming fall economic budget that is going to be presented later this month by our part-time finance minister and government, and I really hope there's some teeth to it. I would like to see the GST eliminated for all food items. Anything related to food should not have a GST. People should not be paying taxes on food when it is a necessity. This is something that we got to strongly fight for. I think we need accountability at all levels of government, and we need these folks in Ottawa to grow up and be adults and look after Canadians. Like, at the end of the day, we got to fucking focus on our own and not worry about the rest of the world's problems. Sorry to say it, but we got enough here to deal with, and we should be focusing on that. Let's scrap this carbon tax. Let's figure out better ways to deal with the climate issue, and let's focus on making sure people are fed, their kids are going to school with a full stomach so they can learn and prosper. But when you have no food in the home, everything starts to deteriorate. Okay, and this government really needs to wake up and come up with solutions that make a difference, because right now it's just a fucking gong show. So I encourage everyone, if you have the ability to help out your local food bank, please do so. Go out and volunteer, go out and donate if you have the resources to do it. These numbers are staggering, and if we have the ability to help in any way, shape, or form, let's go out and do it. They need our help. So I plead plead that everybody do their part and try to help out. The interest rates kind of moved around a little bit after the Fed announced their CPI down in the States, taking a little bit of a downward trend, lower than what economists were expecting. And it kind of caused our bond market to kind of drop a little bit, but it bounced back a little bit. So we landed at about 381 this afternoon, down from last week's 391. So it's a 10 basis points drop. But in about a month, we've seen about a half-point decrease in the 5-year bond yield. And we really haven't seen the same impact on fixed rates by our lenders, but we are seeing some monolines make significant adjustments to their rates. The big banks haven't yet. You know, they always see November, December, January as very slow months, so they're not really trying to be a leader in the discount game. But we are seeing some rates adjust downward, not at the same pace, but we're seeing movement, and that's a good thing. We still have the Bank of Canada meeting on December 7th. We're going to have some employment numbers and CPI numbers before that meeting takes place. So it'll be very, very interesting to see what that data says and how the Bank of Canada is going to react to it as we end off 2023 and we head into the new year. Some good news on the used Porsche tracker front. As everyone knows, I track how many used Porsches are for sale within a 100-kilometer radius of where I sit at Dufferin and Orphis. It's a data point that I've been tracking for over a year just to see if the toys are starting to be sold off for people to access some cash and liquidate some assets. And we've seen a little trend downwards. I don't know if it's the best time to sell Porsches as the weather turns, but we're definitely seeing a lower level than the peak at 1261. This week we're down to 1226. Last week we were at 1237. Not a lot of movement, but we are seeing some price reductions on these units that are not selling. You know, I go to autotrader.ca as my tool to track these stats, and it looks like people are trying to discount these things at an aggressive level to get rid of them. So interesting to see that. Again, for those folks that have been supportive and encouraging me, I want to thank you all. I think the world of all of you who have been very supportive of the show, reaching out. We've had a flurry of people reaching out looking for some assistance in many facets of finance, whether it's investment properties, refinances, purchasing. I want to thank you all. So the team's busy, we're happy, and we're eager to help. But I do want to tell a little story. And I think it's important that when you're buying a home, you're getting financing, you're dealing with experienced people, folks that have been around, folks that understand the market. I'm going to tell you a little story, okay? There's a lot of realtors out there that are saying, hey, the rates are bottomed out, it's a good time to buy, you should buy, now's the best time. Everybody's trying to encourage you to do something. But I will give you this story. In North York, at Wilson Heights and Shepherd area, in the early 90s, late 80s, early 90s, there was a plot of land in which Bramley Limited was a developer at the time, built about 175 homes, okay? They were wonderful homes, and they were going for about $1,050,000 back in early 90s, okay? The original people who bought these homes paid the top price. And in one particular case, this home was purchased for $1,050,000 in 1990, and it was sold in 1996, okay, for $580,000. Okay, 6 years later, it sold for significantly less, almost half of what it was purchased for. In 2004, that same house had a third owner. 14 years later, after the original built date, it was sold to a third owner for $880,000. Okay, so 14 years had lapsed, and the value of that home bought at the peak still hadn't recovered. And this is a true story because this house is the house I live in. I've been living in it for 19 years. Okay, and I bought a home 19 years ago that its original purchase price had still not recovered after 14 years. It took another 3-4 years before it hit that $1,050,000 value. Not that it's for sale, I'm just giving you perspective. Not everything goes up and down, okay, in 2-3 years. Sometimes it takes a lot of years to recover. And the early 90s is a history lesson for folks who think they know what they're talking about. So I encourage anyone looking to buy, use an experienced agent, someone who's given you the goods. If you are buying today, you should be in a position of control. You should be offering below market and seeing who bites, okay? There's still a disconnect between sellers and buyers. Sellers are still expecting a price point that has long been passed. And over the next 12 to 18 months, there's going to be a significant buying opportunity for people looking to buy, and they should be very patient and deal with an agent that has the same patience that you're looking for. So I encourage you to make sure you're dealing with a pro and make sure you're dealing with a mortgage professional that's going to give you the goods on how the pricing works, how approvals are key, pre-approvals are key before you go out and buy, so you don't get caught. I've had a number of people call me this week saying, you know, I'm putting in an offer and my agent's asking me to go in firm. You don't need to go firm in this marketplace. And if you're being asked to, move on to the next property, okay? There's going to be a lot of choice for you. And it's not something a lot of realtors want to hear, and I'm probably going to get bashed for this, but the reality is you are in control. Buyers are at a premium. And right now, if you are looking to buy, you should be in control. So just remember that, okay? So for all of you that aren't subscribers, please hit subscribe, hit a like, send a comment. Always would like to hear from you. I want to move on to the Q&A, so let's buckle up, tighten the chin strap, and let's get into the hockey helmet where I'm going to answer some of your questions that you've sent in, okay? Are you seeing mostly first-time buyers, mover-uppers, or investors now with mortgage applications? Well, it's a good question. We're seeing a good mix of buyers that are getting pre-qualified. Many first-time buyers are still in need of some help to qualify, so we are seeing first-time buyers with some guardians, some parents helping out with co-signing to qualify for mortgages because of the stress test pushing that qualifying rate to a point in the 8% range. So we are still seeing a lot of first-time buyers, but they're a little bit more selective. We're seeing strong down payment gifts from parents to first-time buyers, but we're not necessarily seeing mover-uppers. We're seeing people that want to downsize, people that want to limit the amount of debt that they're carrying, and they want to live in something a little bit smaller. Not sure if that's the demographic we're dealing with because of my age and people that watch the show, I'm not sure. But we then have a number of investors that are looking for deals. They're looking for value. They're looking to lowball and see what sticks. A lot of those investors are struggling to find product because there's still those folks that don't have a sense of reality of where the market is, and they don't want to sell. They're holding out. So there's still a lot of listings that are sticking because people are holding out for top dollars. So that's the type of mix, but we're seeing a good range, and we're also seeing a lot of refinances, a lot of people trying to figure out how they could manage this payment increase adjustment when they're coming up for renewal, coming up for refinancing. We're seeing a bunch of stuff, and listen, it's tough out there. Even a lot of self-employed people are seeing a little slowdown in their businesses, depending on the sectors. Retail and servicing in the housing world has slowed down a little bit, and we're starting to see job losses. We're starting to see cuts. We're starting to see companies go under. People filing for bankruptcy protection. You saw Bad Boy, a company that's been in business 60 years, file for bankruptcy protection. So we're definitely starting to see things break, and we're going to continue to see things break as we go through the next 12 to 18 months. But thank you very much for that question. Next one. Seb7035 asks, can a listing agent turn a house into a bidding war after they've told you they were not holding out? I guess they mean they're not holding out offers. Well, listen, at the end of the day, if you're not holding out, anybody can come with an offer. If two people come at the same time, you might have a bidding war. I always find it coincidental when you put in an offer on a house, another one actually pops up that's been listed for a while. It's just really interesting how that works. But, you know, it could happen. But the reality is there's not a lot of buyers out there and lack of supply that bidding wars could happen. Now, if you're in a very prime area, in a desirable neighborhood, an unbelievable home, and you price it properly to gain that bidding war, it's possible. But for the most part, I think we're moving into a buyer's market, and bidding wars are probably few and far between. But thanks for that question. Any thoughts on the recent townhouse fires in Vaughan? Well, just a hunch, but I don't think it was an accident. Let's put it that way. There seems to be a lot of fires happening at this time, and I'm just going to go out on a limb and say they're not necessarily accidents. They're being investigated. I'm not going to speculate as to what's going on, but there's just been a lot of it happening, and desperate people do desperate things. I'm interested to find out what the final result of the investigations are, and I'm sure we're going to find out sooner or later, because the media loves bad news, right? Like being in the media for 19 years, I learned one thing. They have one motto: if it bleeds, it leads. That's how the media works. They're never covering the story of the guy who helped the old lady across the street, okay? They're always looking for the gore. They're looking for the car accident. They're looking for bad news. That's what they want, eyeballs. So we'll see. Question: Why are sellers not reducing prices? Listings are piling up and not selling. Well, this goes to the point I made earlier. I still think there's a disconnect between people's expectation on what their home is worth and what buyers in this market are willing to buy. I think the disconnect really is, and I've had this chat with a number of people looking to sell, and that is they haven't realized how much of an impact these interest rates have had on borrowers. People have lost significant buying power. You know, these rate increases have prompted a lot of these folks that are looking to buy to have their buying power reduced by 20, 30%. So if they can't buy for higher, they can't afford to purchase, right? If they can't get the mortgage, they're not going to be able to afford the purchase price. So things got to come more in line. I was on a show earlier this week with Nick Opadesano, the Revealing Real Estate show, and we talked a little bit about this, right? Like I think at the end of the day, people just need to realize that anything over $1.4 million, $1.5 million just isn't moving as fast as it used to be. And you have to give it time. If you have patience, just wait. Don't worry about it. List it, let it sit. You know, if you really think the property is worth that much, at some point in time, it probably will sell for that much. It may not be this year, it may not be early next year, it might be a while down the road, maybe when rates settle. But the reality is that higher rates have impacted what people can afford. And I always stress this point. People don't buy houses, they buy payments. And if they can't afford them, they're not buying them. So I will leave it off at that. And I want to thank everybody for tuning in today. I want to also thank people for getting one of the videos hit 1 million views. Unbelievable. I never thought that anybody would be interested that much in mortgage related content. But one of the posts got 1 million views. So thank all of you for sharing it, passing it on, whatever you did. I really, really appreciate it. So thank you. And as I said earlier in the show, the Daily Bread Food Bank is reporting record numbers of people visiting these food banks in Toronto and the GTA area needing help. If you have the capacity to help out in any way, shape, or form, please do. Reach out, go donate, go volunteer, go do what you can. If you have the capacity to do it, to help these folks, they need our help. And as we move into the holiday season, they're probably going to need it more than ever. And on that note, I want to thank you. I appreciate all your feedback, comments, and support and encouragement. And we'll see you next week on episode 157. Take care.